Crypto in the US is dying, but it's paving the way for a huge global shift in the crypto market. In today's show, we're going to run through the current landscape of crypto and talk about exactly why this shift out of the US and into other nations could open the doors for a massive crypto revolution. We're going to run through exactly what has happened in the build-up over the last few years to point towards a huge shift in the US's approach towards crypto and talk about exactly what it means for you. If you are in the US and you're a crypto investor, you need to watch this video. And even if you're not in America, this video will give you an insight into exactly what's happening in the face of what is very aggressive policy by the SEC. I believe this is a must-watch show for any crypto investor because at the end of the show, you will have an understanding of the current landscape of cryptocurrency and therefore its future. Let's start exactly with what has happened in the US, because the US was a pretty pro-crypto nation a few years ago, or at least that's how it seemed. People were optimistic about crypto. The biggest projects and founders were all developing in America. We had the CEOs of most of the major blockchains, at least somewhat based in the US. And this was in 2017, 2018. And if you go back to further before that, 2013, 2014, America was the crypto hub. Even New York was a crypto hub. But over the last 2 years, things have drastically shifted. And I want to talk about why that shift has happened and exactly what has happened over that period. The first thing we saw that indicated towards a major shift in the US's approach to crypto was the initiation of Operation Choke Point, essentially a way for the US to stifle the amount of liquidity entering the crypto ecosystem without having to run the optics nightmare of a flat-out crypto ban like China executed. So how do you actually stifle the amount of liquidity going into crypto without having to directly just flat-out ban it and risk an optics nightmare? Well, what you do is you cut off the on and the off ramps. So the first thing that the US started doing, and this was the major indicator to us as investors that things were shifting, was cut the on-ramps and cut the off-ramps. So although they didn't have full control over the collapses of the banks, it was very convenient that the banks that did end up collapsing during the banking collapse were the banks that had the crypto infrastructure, that had the on and off-ramps for cryptocurrency exchanges. So obviously we saw Silicon Valley Bank collapse. They were a major crypto partner. Then we saw Signature Bank collapse. They were also a major crypto bank. We also saw First Republic collapse. And many of these banks were scooped up by the big conglomerates like JP Morgan and Goldman Sachs. We're going to get into why that is in a few minutes. But it's very interesting seeing the condensing of the banking sector in the US go from thousands of banks being condensed into the big banks like JP Morgan, and that does have big ramifications for crypto. Then essentially, crypto firms started to scramble because exchanges in the US, they didn't really have a great way now because they lost some of their major banking partners like Signature to on and off ramp fiat currency. So essentially what that does is it blocks the amount of new inflows into the crypto economy via getting rid of the banking partners. Because if you don't have banking partners, how do you get your money into crypto? How do you get your money out of crypto? Now, of course, some exchanges still have partners. It's not like all the partners evaporated, but we did see a lot go down. And that is a very effective way from the US's perspective to actually stifle the amount of liquidity that can come in and out of crypto, essentially Operation Choke Point. So that was the first thing, like the first major turning point. But then what started to happen was we started to see like pretty overt political statements from President Biden himself and from Senator Elizabeth Warren. So Biden actually said that he thinks Congress should cut the tax loopholes that help wealthy crypto investors versus the Republicans thinking that they should cut, food safety inspections. But this graphic, very interestingly, they could have picked any topic. They could have picked tax loopholes that help property investors. They could have picked tax loopholes that help stock investors, but they picked crypto. This was a very telling sign that the US was starting to frown upon crypto and was starting to really shift its approach to crypto and had a disdain for crypto, at least the Biden administration. When we talk about the US here, we're talking about the current administration, the current SEC, the current administration, because other politicians and a lot of Republicans are actually pro-crypto. But unfortunately, whoever is in power does have some sort of jurisdiction, especially the SEC, over who they can and can't go after. Of course, a lot of these securities laws need to go to court to actually prove whether a crypto is a security or not, and that's what XRP is fighting at the moment. We're going to talk about XRP at the end of the show, but that doesn't stop the fact that the SEC can slap down enforcements, can sue any crypto business that they want to. They can do that. They can cause living hell for these crypto companies in the US without necessarily even having to have an overt ruling by a court, although it does often come to that after significant costs incurred by these crypto companies to actually fight the SEC. So after what Biden said, Gary Gensler came out and said that everything other than Bitcoin is a security. And I mean, Gensler has basically flipped his entire approach on its head, because just a few years ago, he was a professor at MIT, as you guys know, and he was actually shilling Algorand. There's a video on my Twitter where I posted Gary Gensler actually promoting Algorand, which is a coin that is now under the Coinbase and Binance filings being considered by the SEC a security after it's down 97% from its all-time highs. And he was a very knowledgeable, and probably still is a very knowledgeable, blockchain expert. So Gary Gensler knows what he's dealing with here, but there's obviously many factors at play behind the scenes which have caused him to completely flip his approach on its head. And now he's saying, after he actually claimed that most cryptos in the market weren't securities in one of his lectures, now he's claiming that everything other than Bitcoin is a security. So when he came out and said this in February, that was after some of the banking collapses started to take shape. We really had confirmation that the approach from the SEC was shifting. And now Elizabeth Warren also came out around that time and said that she was basically building an anti-crypto army. And she says that she likens this crypto environment to the 2008 stock market crash. And she said we need basic protections in place to keep people from getting cheated. She's very anti-crypto and against the cryptocurrency as a whole. Now, it wasn't even just the centralized players that started to get sanctioned. It was decentralized players like SushiSwap. So the US was trying, and it's very difficult to do this, but at least, where they can within their purview, trying to also impose some sort of sanctions on the decentralized world as well. Now, all that stuff led up to the events of last week. And obviously that did cause a big, crypto crash. And that is the title of today's, video, is crypto dying in the US? Well, this was the first indicator that that is the case. And it was the fact that Binance and Coinbase were handed significant lawsuits that in the process named 19 crypto tokens as securities. So all this buildup with the banks, with Operation Choke Point, and then going into some of the statements that these politicians made, led to what was essentially a massive action against the two biggest crypto players in the US. And that was Binance and Coinbase. I'm sure you guys have heard all about it. They basically, went out and said that they were listing unregistered securities. Binance had much more severe claims against them, potential fraud, manipulation. We may even see DOJ action, criminal action against CZ and Binance in the near future. That is something that I am potentially anticipating. The Coinbase case was very different. I just want to make that clear. Coinbase and Binance are a lot different. Coinbase was more focused on the unregistered securities and staking side of things, basically saying that these tokens, 𝗕𝗆𝗃, NEAR, Flow, ICP, VGX, Dash, Nexo, and these coins in the middle as well, were listed by Coinbase without having the proper registration. Now, it's funny because Coinbase and Binance have obviously been talking to the SEC and regulators for years to try and get clarity over what is and what isn't a security so they wouldn't breach these laws, but it's basically impossible. They're in an impossible situation where basically it's a lose-lose, because even when they do go to the SEC, they can't get proper guidance because the SEC doesn't want to give them guidance because there is an agenda here. There is a kill crypto playbook that is currently being executed in the US. They don't want Binance and Coinbase controlling the crypto market. They basically are trying to create regulatory uncertainty. So if you're the SEC, why are you trying to create regulatory uncertainty? Well, the first thing you're trying to do is you're trying to deter institutions, funds, and new participants from touching crypto. This goes back to Operation Choke Point, right? Like getting rid of the banks. How do you limit crypto? Well, you cut the on and off ramps. What is one major way that crypto grows and gets liquidity? and gains traction? Well, it's new funds and new market participants entering crypto. Big TradFi guys that have big stock market funds, at certain points in time, they may choose to enter crypto. Big companies like Tesla, Apple, those kind of companies may choose to enter crypto, hold Bitcoin on their balance sheet, hold Ethereum on their balance sheet. But if you create enough regulatory uncertainty in the market, why would a big company like a Apple want to buy cryptocurrency when they run the risk of breaching SEC law, or at the very least run into regulatory uncertainty, given the fact that the SEC is giving no clarity? So the fact that we have no clarity in the US, don't mistake this for a mistake. It's by design. They want uncertainty because that limits the amount of players that can realistically in the US enter crypto, because these big companies, they have stakeholders. These big VCs, these big TradFi funds, they have big stakeholders. And why would they risk their entire business model for a moonshot on a cryptocurrency with 1% of their portfolio? They're simply not going to do it. And that is driving a lot of these players offshore. And that is the point I'm going to get to in a minute. We're going to look at how this is actually evolving the crypto landscape. And I'm trying to paint the picture for you guys of exactly what's happening in the US. Of course, that does limit the amount of new capital entering their ecosystem. And this allows crypto to be stifled without the optics nightmare of the US explicitly banning it. Now, all of this also may have a secret hidden agenda behind it. So I watched a video from Elio Trades a couple days ago, and I kind of got the wheels turning in my head. And it's basically that the thesis that basically what happened in 2018 and 2019, and even last cycle in 2014 and 2020, is that these crypto cowboys in the eyes of the US, these kind of new-aged crypto companies, they came into the market and they made billions of dollars. Binance made billions. Coinbase made billions. These crypto companies, even a lot of the unregulated ones, made so much money, whilst your JP Morgans, your Goldman Sachs, your bigger, US conglomerates and TradFi guys, they were sitting on the side and they were watching these guys dominate a new upcoming industry. And presumably they were quite jealous. Like, if you're a big company and you're missing out on 1,000% returns while, your stocks are doing 8 to 10% a year, you're going to feel a little bit like you're missing out on the action. So they sat on the sidelines. They watched these crypto cowboys, because, that's how they consider them, making billions of dollars. And they didn't like that. So what is a way to change the landscape? Well, basically what you do is you go after these players. You make it basically impossible for the players like Binance and Coinbase to operate in the US. And then you give your licensing to some of the bigger players in the market, like, let's say, a TradFi company like JP Morgan or Goldman Sachs. These big guys, you give them the correct licensing, and then they're able to operate their own exchange. So I have a theory here that what we're actually seeing might not be the US killing crypto explicitly, but they might be trying to create an environment which shifts the power, who holds the power of crypto, from the new guys to the old guys, because they were missing out on huge gains and they felt FOMO missing out on huge gains. So that is one of my theories as to what is happening right now. We are seeing a shifting of power because the US does probably feel threatened. I mean, they didn't create Bitcoin, we don't think. They didn't create Ethereum, or at least they don't have control over the network, and that scares them. They want control. I mean, why do you think CBDCs are being implemented? Why do you think the fiat currency design basically has, the unlimited, unfettered ability to be printed and burnt? They have full monetary control. They don't have full monetary control over Bitcoin and Ethereum, and that scares them. And especially not other altcoins that are, offshore or completely decentralized. That scares them. So how do you get some slice of the pie, knowing that you won't own the Bitcoin network? Well, you can either buy a shit ton of Bitcoin or buy a ton of miners and own all the hash power, or the other option is you just own the ramps. You own where people are able to get money on, off, and trade. And then you get a cut of the pie. You get a slice of the pie. So if the US can have one of the players that's a bit, closer to it, controlling crypto, that would be a benefit from their perspective if you're really greedy and want to control crypto. Now, I'm not saying that Coinbase will never get the right licensing. I'm not saying Robinhood will never get the right licensing. It's just right now, at this current moment, it looks like that is where the US wants to go with crypto. More basically centralize the industry to the players that it knows it can control. And of course, probably wouldn't be too happy with some of the offshore structures that some of these other exchanges are using because, well, the US doesn't directly benefit from a lot of that trading. So, okay, the US has come after crypto, right? Obviously, it's bad. So what does it actually mean, for investors? Well, there are implications in terms of securities laws. Obviously, if a token is actually asserted to be a security by the High Court, then it limits where it can be traded. It can't be, traded on these typical crypto exchanges. You need to have a registered exchange. It would have to be traded like a security, probably a lot more paperwork, like the stock market. It makes it very hard to trade. So there's a barrier there if cryptos are named securities. But there is a much bigger event happening right now. A mass migration is happening. So what I'm looking at, instead of focusing on the US and going, oh, the US is banning crypto, it's going to zero, crypto's dead, I'm so scared, I'm actually looking at the opportunity it's creating for other economies to benefit. Because what we've seen over the last month has been monumental for the crypto industry in terms of the shift we've seen from some of these other countries. In this video right now, I'm going to go through exactly what has happened over the last 2 months outside of the US, talk about Hong Kong, Europe, the UAE, and actually look at what their response has been. Because if these nations put pressure on the US, you best believe that the US at some point is probably going to panic back into the crypto market, even if they don't want it right now. They're going to see Hong Kong, they're going to see Europe, they're going to see the UAE, they're going to potentially see Australia, if I'm Australian, if we do things right. Maybe even Russia. We're going to talk about Russia in today's video. They're going to see these countries adopting crypto and taking advantage of it and start to feel threatened by that later down the track. So the shift we're seeing right now is actually the most substantial shift we've seen in the crypto market in years, because it's not just a shift in tokens, it's a shift in the geological landscape of where people hold crypto. So let's get into that right now and look at the individual catalysts. Before I get into that, if you are in the US, because I know a lot of my viewers are in the US, and you're looking for an exchange to trade on, because I know it's hard now to find an exchange that you can access, there's a link in the description to Prime XBT. I'm currently running a 20% deposit bonus, meaning if you deposit $1,000, you get a $200 bonus. Deposit $10,000, get a $2,000 bonus. $30,000, get a $6,000 bonus. So there is the bonus up to $6,000, or no, actually up to $7,000. So you can deposit $35,000 and still get your 20% deposit. So it's a pretty big deposit bonus. It's probably the biggest we've done, like a straight up 20% deposit match. So if you do want access to that 20% deposit match, there's a link in the description. Use that link. Use the code Miles20. You just got to click this code at the bottom, and then you will get access to the 20% bonus. So basically, deposit $1,000, get $200 in extra in your account, which is quite nice to trade with. And I also wanted to mention, it's not just a crypto exchange. If you want to trade Forex, there's Forex pairs on here. If you want to trade commodities, there's commodities pairs on here. You can see like there's aluminium here, and there's also a lot of the altcoins as well. Of course, you've got Ethereum, Bitcoin. You can see, Litecoin here. A lot of the other altcoins as well. Not every altcoin, but for the guys in the US, and maybe you have some issues with KYCing, whatever, Prime XBT I think is a good option for you guys. Obviously, we talk a lot about Bybit and stuff, but with the new Bybit KYC rules and the operational rules, it makes it a lot harder for other people. So I thought I'd mention Prime XBT if you need a new home. So let's go through where crypto could potentially find a new home. Well, firstly, I want to talk about Hong Kong. This has been probably the biggest shift, because China, you could consider China in a roundabout way using Hong Kong as some sort of proxy for allowing investors to invest in crypto. Now, I know China isn't explicitly legalizing crypto, but this was a major first step. I don't think China would just allow Hong Kong to do what they want. They clearly are watching here. Can crypto work? Is what Hong Kong is what they're doing with crypto potentially a successful path for us? Can mainland investors now invest through Hong Kong without having to go through China directly? Like, I know it's not China mainland itself, but there are major reasons here for why this could mark the turning point for China as a whole. And I think the legalization of crypto trading 2 weeks ago on June 1st for Hong Kong was a massive moment for the crypto industry. Now, of course, we talked a lot about it, but if you're in Hong Kong, you can now trade as a retail participant Bitcoin, ETH, ADA, Matic, Sol, DOT, Uni, Link, Sand, Litecoin, AVAX, Axie, Atom, XLM, USDT, and USDC. So not every token, but there are a significant amount of tokens which were listed, and I'm sure there will be more over time. Now, as far as I'm concerned, the trading volume's low. It's going to take time. Not all the capital in Hong Kong, which is obviously a huge business center of the world, is going to flow into crypto right away. It is going to take time, but over time, I do anticipate that this can be a crypto hub. We know that 10,000 people attended the last conference in Hong Kong. That is a lot of people for a crypto conference in the middle of a bear market. So there's something happening here, and I actually think I'm going to Hong Kong later in the year to attend one of these conferences. So Hong Kong was the first one. The next one is really interesting. It's the UAE and the UK. I know it's kind of having these two countries next to each other seems weird, right, for crypto, but actually both countries have made very interesting announcements since the US has clamped down on crypto. Now, the obvious one is the UAE. I would say in the whole world, Dubai, United Arab Emirates is probably the most crypto-friendly country of them all. Like, if you're looking to start a crypto company, the UAE is going to have the most lax policy. If you're a crypto trader and you can move to Dubai, you'll pay very minimal tax, and you'll also have a lot of freedom in terms of how you trade and how you operate. So I think that was only affirmed by, and I know Abu Dhabi isn't directly Dubai, like they have different obviously different government. They still announced a $2 billion initiative to back Web3 startups, which was absolutely massive for the Middle East. And we're also seeing, many Dubai-related policies as well. A $2 billion fund was huge. Now, this was back in February when the banking stuff first started to happen. But now we're seeing the UAE start to say that they want to accept license applications from crypto firms. So they actually made an open kind of casting call in a way for companies, especially in the US, that are facing a lot of regulatory headwinds, that they can come to the UAE and actually find a home. So this was massive. We already knew that they were going to be accepting of crypto companies, but they're basically saying, we want to be the crypto hub. That's essentially what they're saying via this. Now, interestingly, the UAE we kind of know was going to be a crypto hub because it's been like that for years. But the interesting one for me is the UK, because the new UK Prime Minister has very different views on crypto to the prior administration, and it could be pretty bullish for the UK long term. Now, I've been skeptical about Europe and the UK, and I still have some of my skepticisms. I don't think perfect policy has been announced by any stretch of the imagination, but we are starting to see positive signs for the crypto industry if you are in the UK. And London, being one of the financial hubs of the world, alongside New York, if crypto somehow opens up in London, that would be huge for crypto as a whole, because a lot of American companies, they're just going to start basing themselves in the UK. And that would be amazing for London's economy. And I think that's one of the reasons why the Prime Minister wants to have positive regulation for crypto in the UK, because he knows that you could get a Coinbase and a Binance and these big companies and A16 and these big crypto funds, Sequoia. They kind of know that if they open up, they can have, these major guys based in London, and London could be a home of crypto developers. And they can kind of get, because, let's be honest, the country's stagnated in many ways, especially economically over the last few years. This could be a way to kind of revitalize the tech scene for them. So it makes a lot of sense. And I think they have an opportunity now to go, okay, the US doesn't want crypto, or the US doesn't want to regulate crypto in the way we want to. Let's do it right. Let's set an example, and let's become a crypto hub. Now, it may not happen like that, because there's obviously, constraints in terms of what laws can pass. But the Prime Minister, which is obviously, the right person you want to have on board when it comes to crypto, he's pretty bullish. Apparently, Rishi sees the opportunity and potential crypto has, and wants the UK to be a leader in it. 𝗕𝗧𝗄𝗧, who also chairs FinTech Founders Network, added. Sunak, a former Goldman Sachs analyst, has on several occasions expressed a positive attitude towards crypto. As the minister in charge of Britain's finances, he outlined a grand plan to make the country a global crypto hub in April that included bringing stablecoins within the regulatory parameters. This is massive, by the way, having USDT or USDC as legal tender. It's huge. And getting the Royal Mint, the official UK coin maker, to launch a non-fungible token. Interesting. Yeah, that side of things interesting, especially the whole CBDC thing, but having USDT as legal tender would be huge. At a drinks reception organized by the venture capital firm Index Ventures, Sunak said he was determined to make the UK the jurisdiction of choice for crypto and blockchain technology, which is massive. Having your prime minister come out and say that is massive. So that's why there could be positive developments out of the UK. Now, the crypto companies know this. This isn't just hot air. This isn't just some bullshit narrative. A16 is actually expanding to the UK. They just announced this. They're kind of going to shift a lot of their operations from the US to the UK. So they're obviously confident that there is a future there for them in the UK. They're moving some of their offices to London. They officially announced this in an announcement a few days ago. We also saw Sequoia allude to that as well. So some of the biggest crypto funds, A16, one of the biggest venture capital tech funds in the world, starting to recognize this as well. And the Prime Minister, Rishi Sunak, commented on the 𝗕𝗃 expansion to the UK and says, as we cement the UK's place as a science and tech superpower, we must embrace new innovations like Web3, powered by blockchain tech, which will enable startups to flourish here and grow the economy. That success is founded on having the right regulation and guardrails in place to protect consumers and foster innovation. While there's still work to do, and trust me, there's a lot of work to do here, this is by no means done, but this is very positive. I'm determined to unlock opportunities for this tech and turn the UK into the world's Web3 center. Powerful words, powerful words. So UAE, UK, seeming to propel this crypto hub narrative in the face of what the US is doing. Now let's talk about what Europe's doing. Now, Europe has been a bit stricter, but the difference is between Europe and other countries is we actually now have a European framework. So a lot of other countries just haven't really announced, I don't know if it's the time or the political constraints, but they haven't really announced, a fully fleshed out plan to regulate crypto. Europe has started to do that. So the MiCA, Markets in Crypto Assets, regulatory framework was announced, and this marked the final legislative approval required before the publication of this framework and the travel rule regulation in the official journal of the European Union. So I think it's a huge step forward in terms of the regulation of crypto assets. Now, there are some things in there, look, which I don't love. You're not going to have it perfect when it comes to regulation, all right? I can't be like overtly bullish about some of the wallet tracking stuff, but I do kind of get it. Like, we can't just have a cowboy economy. Things do need proper regulation. Yes, it's probably going to limit what can be done in Europe. But what I've heard from, a lot of crypto companies that I've talked to, projects, I've heard that they are definitely more bullish about what's happening in Europe versus the US. And I know some companies directly that have actually gotten MiCA licenses. So they've actually had approval to operate in Europe. Now, if you're in the US and you want approval to operate, it's basically impossible to get SEC permission. So it's very different, the landscape in Europe versus the US. And I do think Europe could, if this is done correctly, and this is not going to be implemented until the end of 2024, by the way, there is time here. None of this is happening overnight. This is going to take years. But if done correctly, Europe could also join the UK in being, a crypto-friendly zone. And the US better be very careful because all this is happening in front of them. And I think the reason this is happening so quickly is because these countries see an opportunity. I mean, a lot of these countries honestly have sat back and watched the US be the global superpower of tech for the last, 70 years. And especially over the last 30 years with the big, .com boom and then all the tech boom, Apple, Amazon, Google, Facebook, all that. A lot of these guys have, not had the lion's share or even much of a slice of that pie. They think that maybe they can grab a slice of this crypto pie. So they see an opportunity here, especially the UK. So Europe adopted its new rules there as well. Now, Coinbase and Gemini also made big announcement. Coinbase announced that it is launching an international exchange away from the US. Clearly, they're kind of being pushed out of the US. So they're going to become a trusted name in the global derivatives market worldwide. We also heard that Gemini Foundation is launching a non-US derivatives platform. So a lot of these big guys being pushed out of the US and actually launching international derivatives platform. And Russia, this is very interesting because obviously Russia and the US, we don't need to talk much about their history. They've obviously had feuds for decades. But Russia and Russia's kind of taking a bit of a step forward now as well in terms of crypto, which is interesting, and making one of its largest banks, Sberbank, eligible to offer crypto trading services. And this is kind of uncommon. It's not often you see like a bank itself offering trading. We like, if you're in Australia, you would know Commonwealth Bank, one of the biggest Australian banks, was talking about doing it, but those plans have faltered and they actually kind of backtracked, and now they're initiating deposit limits. Whereas countries like Russia, now they're actually going to open, in-house bank trading of crypto. That is pretty big. I mean, when you have the banks that are actually holding your money, enabling you to use that money to trade crypto, I think that is pretty big news. And especially from Russia, because we know that, they have a shaky relationship with the US. And for that reason, I think they may see this as an opportunity as well. So crypto is built for this. Is my last point before we get into a market update, because there's lots happening this week. Crypto is built for this, right? I know a lot of the sanctions in the US are scary. I know that if you're a US investor, you're probably not feeling comfortable right now as my camera tries to focus. There we go. But at the end of the day, crypto is immutable. Crypto is censorship resistant. And this is why it was built. It wasn't built to have the US bully it. It wasn't built to have sanctions imposed. It was actually built to be in control of the people. So although these headlines are scary, the SEC stuff, and yes, we want the US. Don't get me wrong, US has the most amount of retail traders. Without the US, it's hard for prices to go up at least as aggressively as they did in the past, at least in the short term. But at the end of the day, with or without the US, now we would love to have the US involved. I know a lot of the audience right now is American. I would love to have you involved. I would love to be able to go to the US and do business in the US. But the reality is right now, a lot of people just don't feel comfortable doing it, and for good reason. So we don't necessarily need the US for crypto to succeed. We would love the US, but we don't need it. Crypto will succeed either way. That is the entire point of crypto. And in a roundabout way, this entire SEC stuff, I know a lot of people started to get more bearish, but in a roundabout way, I became more bullish. I became more bullish on crypto because it really emphasized why crypto was built. The fact that the US is trying to control crypto made me realize, well, they can't actually do it. They can try, they can limit the on and off ramps, they can limit who can trade it, but they can't stop it. And that actually makes it more powerful. When the government wants to stop something, that gives it more credibility. That actually gives it more credibility in terms of being a genuine decentralized alternatives, because people realize, well, my Bitcoin, that's always going to be my Bitcoin. The US can't do that. They can print money as much as they want, but they can't take control of my funds. So I think it actually made me more bullish because it really, it's easy to kind of forget about this in the ups and downs of the market and the meme coin rallies and the liquidity, crises and all of this. But at the end of the day, it reminded me like why I'm in this space. And it's because I believe in the ethos of decentralization and the fact that it is censorship resistant and smart contracts are, by their very nature, immutable. So it kind of made me bullish, especially on Bitcoin and ETH. Now, yeah, a lot of the alts have headwinds, but at the end of the day, even if they are called securities, that doesn't kill them. It does significantly limit how they can be traded, and that may obviously hurt the prices. But we don't even know if that will be the case. This still needs to go through the court. It's going to take years. It's not going to happen overnight. They can call anything they want securities, but we actually saw the Hinman docs be released today, which was actually one of the old SEC members that drafted a speech in 2018 saying that the crypto market needs to be regulated differently and not necessarily go solely off the basis of the Howey test, because it is a new industry, and that Ethereum and Bitcoin weren't actually securities. I'll get it up right now. He mentioned, William Hinman, that there's a regulatory gap. So this was a speech he made in 2018. It was a draft speech that was drafted on email. These emails weren't admissible in court for the XRP case for a long time. The SEC didn't want these emails coming out. They didn't want them to be admissible, but they finally were made public. We kind of knew what they were about, but the entire emails were made public, and by all indications, they will be admissible in the XRP case, which could, I don't necessarily think it flips the case on its head because it already looks like it's going towards a Ripple, but it definitely could add a sound legal basis for cryptos not being called securities and XRP not being called a security. If XRP is not called a security, that does set not binding precedent because it's not, a high court ruling, but it does set some sort of precedent for future cases. So if XRP is called a non-security in the Binance and the Coinbase lawsuits, although that's not guaranteeing that other ones will be called securities because they need to be looked at as individual cases, it definitely helps. It does not hurt at all to have an XRP win. So I think that could be some sort of catalyst for crypto, some sort of bullish catalyst. And especially for those cases, I think it has ramifications there. So let's talk about this week now. So now you guys understand the US situation. You understand how things are migrating. Let's talk about what's happening this week specifically for the ones that are tuning in with me live. And let's talk about what is one of the biggest weeks in crypto. We already had Tuesday knocked off, where we got CPI data, the Hinman docs, the SEC's Coinbase ruling response, and Binance's principal hearing. But we still have huge announcements this week. We have PPI data. We have the FOMC meeting. I know it's weird talking about macro now, because a couple of months ago the whole market was driven by macro. Seems like it's taken a back seat, but we're forgetting. We do have a big meeting tomorrow, or later today, depending on what country you're in. And then on Thursday we have the jobless claims, which is going to dictate the kind of unemployment rate in the country, and then retail sales data, which is a huge consumer sentiment driver. So let's look through some of these events, and then map out some potential price movements, talk about how I'm feeling about the market in general. Before we get into that, if you do want to trade, now I don't know what country you're in, but if you can trade on OKX, we do have a big offer right now, which is a $30,000 rewards offer. So basically, if you use the link in the description for OKX and you sign up and trade on OKX, you will get a $10,000 mystery box just for signing up. Don't need to deposit. If you deposit more than $50, you get a second mystery box. So that's $20,000 potentially in mystery boxes. And then if you do that, you can go for step 3, which is you can boost your winnings by trading according to this trading chart here. So the more volume that you trade, the more levels you get. And this can give you up to $10,000 in additional rewards. So, of course, there's a caveat here. You're not winning $10,000 for just signing up. You can win up to 10,000. So let's say you sign up, you might win nothing. You literally might get a mystery box. It might have nothing in it. It might have $10 in it. Might have $100 in it. Might have 1,000. Might have 50. You don't know, but it can be up to 10,000. That's the maximum price. It's kind of like a lottery. Look, odds are you won't win much, but you never know. You never know. So if you want to register and sign up using the link in the description, you can to get access to that. And obviously, if you deposit more than 50, you will get the next 10,000. And then if you trade, you'll get the next 10,000 of potential rewards. So obviously, read the terms and conditions. Trade reasonably. Don't use crazy leverage in this market unless you're experienced and know what you're doing. Of course, I'm not saying take risks, but just offering it for the ones that are interested, because it's a pretty damn big bonus. The Prime XBT and the OKX bonuses are very big at the moment, and you can create an account using that link. You have to use the link if you want to get access to those mystery box rewards. So I talked about Hinman, which was big. XRP price. Let's have a look at what's happening in terms of XRP. Currently into resistance. Part of me feels like this is a triple top. I mean, we could see the top in September, see the next top in March, see the next top in May. Also, it looks like a lower high. But on the positive side, you do have your higher lows coming in. I think we may see like a condensing here into some sort of wedge pattern. That's kind of how I'm feeling. I don't know if it's going to play out over the next few weeks, but that is how I'm feeling about potential price action here. My screen looks weird. It's kind of blurry. Don't know why that is. I'll just reload the page. But I think we're condensing into a wedge for XRP, but you have to keep in mind that it is currently at its resistance level. So let me get up the XRP chart. I don't know why my screen's so blurry at the moment, but come on, XRP. Load. It's not loading. I don't know why it's not loading. But yeah, basically what you need to know, I already know the chart basically off by heart. We're heading into major resistance right now. And if we break above the 50, here we go. If we break above the 56 cent mark, then there is a genuine path for XRP to push up to the 92 cent region, which is your next major resistance level. However, I just don't know if it has the firepower right now. What could give it the firepower to break through and push to those upper targets? Well, obviously a core case win, 100% would cause some sort of pump. But how long lasting that pump is and whether it's priced in is another question. But I just feel like right now, post Hinman docs, if you haven't longed XRP, you are longing into resistance. So personally, I wouldn't be doing that. I just think right now the risk reward of longing XRP is not great. In fact, you could argue it's a short, but also it's a shaky market this week. So opening leverage trades pre-FOMC, unless you think you have an edge on macro, is a tricky one. It's a very tricky one. I mean, you can try and trade it, but it is a gamble. So anyone that's trading this week, you have to make the decision whether you want to gamble on FOMC. CPI data, however, yesterday or today, earlier in the US, printed a plus 4% year on year. That was a huge decline in the inflation rate in the US. It's funny, inflation was a massive narrative, and it still is a big narrative. But I think at some point we're actually going to start talking about deflation. And what happens in a deflationary environment, and this is jumping the gun a bit, this might not happen for a year, but what happens in a deflationary environment? Well, they need to print money to start stimulating the economy again. I just feel like the effect of the rate hikes has not been fully felt by the market. All this is delayed. We're still seeing everything 2 years later. We're seeing the delayed effects now, and to be honest, the money printing kind of just kicked the can down the road even more. So all these rate hikes, they're all, very good and well in the short term, and you'll see inflation coming down. But what is the real effect of that long term? We still don't know. I mean, we have an idea. We could actually head into a deflationary, disinflation is the word, a disinflationary environment. And maybe the US will start printing money again, but that would mean the economy is faltering. It would likely mean a recession. So the thing is, yeah, you could make the bullish Bitcoin argument, but there's probably going to be some pain in the short term if that is the case. I'm not a macro expert though. That's just my opinion. I'm sure there's much smarter guys like 𝗕𝗆𝗵𝗵𝗏 on Twitter that can give you more of a macro insight than me, but I still feel like there's some pain from I just feel like a lot of the after effects of 2020 haven't been fully felt yet. But they are starting to be felt now because, you have rate hikes and then there's typically a lag. Now, a lot of businesses are starting to feel it. And the market's obviously feeling it. That's why it's come down, right? Markets aren't backwards looking. They're forward looking. So the crypto market, if you have Bitcoin being priced at 25K, it's being priced at 25K, keeping in mind what's going to happen over the next 6 months to 1 year. And anything in the meantime that changes that outlook will change the price. So markets aren't dumb. They are forward looking, but sometimes they're stubborn. And sometimes they're inefficient. In fact, a lot of the time, especially in the crypto market, they're very inefficient. So what's happening tomorrow? Well, it's the FOMC meeting, which will give us the verdict on what the Fed does with the interest rate. Do they hike? Do they pause? Well, it's looking like they're going to pause with a 93% probability heading into a pause tomorrow. In every meeting since 2009, the Fed has done exactly what the market was expecting it to do. Not a single surprise. So obviously the actual change in the target rate is not going to be what causes market movement. What may cause market movement is basically the projection. So the projection, the dot plot, I think are always the more important thing that investors are looking for. I mean, a couple months ago, they were looking for Jerome Powell, is he hawkish? Is he dovish? But I don't think it really matters anymore. I mean, we pretty much know he's going to be hawkish tomorrow because that's just typically what he does. He's still trying to get inflation down, trying to squeeze that last % or two out of inflation. And I still think he will remain relatively hawkish. Fabian, who is a crypto analyst that I respect, says, with no hike baked into FOMC tomorrow, the weight will be on their updated summary of economic projections for guidance as to how many hikes will still be on the table this year. The end of year estimate was 5.1 last time, but that was the meeting after the banking fallout. Now we have a runaway equity market because, stocks have been pumping, especially the AI and tech stocks, and a labor market that's not budging. There are signs of headline disinflation, but not nearly enough for them to signal weakness in their stance with core components basically unimproved. So that's the interesting thing as well, the discrepancy between headline and core inflation. I personally expect to see revision up to 5.4 and wouldn't be surprised to see it as high as 5.5, signaling at least one more hike and leaving room for two. Well, 2 would be very bad for the markets, let's be honest. We can also be pretty sure Powell will bring his most hawkish tone to the presser, although we're at the stage where markets will look past that. Hawkish pause and negative EV for markets overall IMO. So, that's if we get a pause. Powell's hawkish. You see that updated dot plot. We see the, the probability of 2 hikes being priced in. That could be bearish for markets. What could be bullish markets is a slightly more lenient plot. Maybe hawkish is less dovish. More dovish, so less hawkish. And that could potentially sway markets in the other direction. Pretty much needless to say, this isn't something you really want to trade. I mean, if you're longing into FOMC, good luck. I'm not. I'm not saying you shouldn't, but it's difficult. And when the Bitcoin chart looks like this, an underside bearish retest to 26.5 kind of looks on the cards to me. Now, this trend that I outlined on my show like 2 months ago has basically been spot on for the last, however many months. Like, what is it? 2 months now. We had our highs. We had our lower highs. We had lower highs again. Basically, opportunity after opportunity to short this. Obviously, you don't short Bitcoin. If you're shorting, you short alts. But basically, many opportunities to short, and we may be getting another underside retest. So this is not a trend that screams bullish to me. Like, this is a bearish trend, a bearish wedge of sorts, depending on how you want to draw it. It's a very bad trend line, but I'm just kind of showing you guys what trend we're in. You can also draw it like this and draw it as a channel. But essentially, it's a downtrend, all right? Lower lows, lower highs. We're in a downtrend. So it's very hard to long against the grain here, at least for me, until we reclaim. I would look for if we start breaking and reclaim 26.5, then that could be the springboard to push back up to range highs of 28. But it could also be another bearish retest encompassing with the last few months, which is you get a bearish test of the underside here at 26.5. Then you make your lower low, and then suddenly you're targeting 24. So still pretty risk off personally. I did make some DCAs. I posted on my Twitter that I bought some Sol and Matic during the crash. I think Optimism and 𝗕𝗏𝗃 are interesting as well ahead of Cancun. I'm big on the LSD and DEX narrative, but I'm going to talk about that in tomorrow's show a bit more. There are narratives I'm looking at, but still relatively heavy in stables, not too long. But obviously my strategy is still to buy Bitcoin and ETH every month. When we have extreme red months, red days, I'll accumulate more aggressively. When we have pumps, maybe I'll take some off the table, but with the goal of stacking Bitcoin and ETH long term. I think, if anything, I'm more bullish on those assets now than I was a few weeks ago. Sounds crazy, right? But actually, the discrepancy now between Bitcoin and ETH and alts is bigger than ever, because you have a lot of the fears that altcoins are going to become securities. You have pretty much a general assertion that Bitcoin is a commodity, even by Gensler himself. And Ethereum, although Gensler tried to kind of call it a security, I don't think that'll fly. I think Ethereum has pretty strong commodity claims as well, alongside Bitcoin. So if that is the case, those two assets are relatively separated from the pack. And for that reason, and not only that reason, just for general supply dynamics, with Bitcoin having the halving, with Ethereum being now somewhat deflationary and usage over time projected to significantly increase, I view them as good assets, sound assets to hold. And that's why I accumulate them every month long term. And that's my strategy with altcoins. I'm much more selective with what I hold. I will do more sort of narrative trading, try to use them as a proxy to make money, and at the end of the day, stack more Bitcoin and ETH. That should never change. So altcoins should be a proxy, at least for me. Like, you may have a different strategy to stack more Bitcoin and ETH. But altcoins definitely can make you a lot of money. It's just, in this market, you don't want to catch a falling knife. You do want to be selective with what you hold. So my portfolio now is sitting at around 10 tokens. It was like 30, 40. I really condensed it over that March and April period. You guys know, if you watch the shows, that I was selling a lot of alts throughout that rally, and I copped shit for it at the time from quite a few people. But the reason I was doing that was to condense back down in case we got that leg down. And what do you know, we did, because we were heading into significant resistance, especially on BTC at the 32K level, 31 to 32K level. We kind of put in our highs here at 30, started to come down, and then I think around 28 I de-risked on a lot of alts, which was still decent enough, a decent enough way to go about things. Let's see what accumulation time. Always, yes, Mr. X, it is accumulation time. I'm 22, not 15, but I'm glad you think I look young. That's great, because I actually think I look like I'm aging a bit, but lovely to hear that my skin is still looking good. Thank you very much. Can Australians withdraw AUD? No, you can't even do it out of Binance now, to be honest. The only Australian off-ramps now are CoinSpot and SwiftX, to be honest. Your video's only one. Yeah, I know. What's going on with my screen quality today? I don't know what it is. I don't know why it's so bad today. Broadcast quality, 720p. I think the settings might be wrong, Paula. I think it's 720p, not 1080p. I think we fucked up. Had to change it in advanced. Very weird. Very, very weird. I'm going to check that after, so apologies for the video. Hopefully the audio is still okay. Yeah, we'll look at that after, because the whole day the video's been bad. 144p. Yeah, the quality today has been shocking. I'm actually going to look on YouTube for you guys live and pause it and see what the go is here. Yeah, it's only in 720. I don't know why we're not in 1080. Super frustrating. I think we got the settings wrong. Must check that in future. The last thing I want to remind you of is the trading comp on G-Trade. So I know a lot of people are switching to DEXs now, which is within reason. Look, I know that DEXs are kind of growing in popularity. We've seen the trading volume double, actually hit its all-time high in terms of spot volume. Perps are still down, but kind of climbing a bit over the past few weeks as people are exiting markets, at least like Binance US markets, etc. So quite interestingly, yeah, a lot of these exchanges now are starting to offer some pretty big rewards incentives. So G-Trade has started a $100,000 King of the Hill contest. So if you do want to test your trading skills and you want somewhere to trade that's not, KYC, like a lot of these centralized exchanges, then DEXs are now presenting like a relatively compelling option. And you can trade here to win part of the prize pool. So the top 30 Arbitrum and Polygon traders, of course, they're on Arbitrum and Polygon. I prefer Arbitrum, but whatever you prefer, will win prizes in ARB and DAI, which is a stablecoin, random draw prices will be up for grabs. And this is very funny. The least profitable trader in the trading comp will also win a prize. So if you're terrible at trading, by the way, I do not recommend doing this, but if you are terrible and for some reason you lose it all, you'll actually potentially win a prize for being the least profitable trader, which is very, very funny. But I hope you guys aren't terrible traders. Otherwise, obviously don't trade. You don't want to purposely lose money. So go for the prize if you want $100,000. In terms of the actual dates, it started 2 days ago, but you still have until the 30th. So you have 16 days to trade and potentially qualify on G-Trade for a prize. So link in the description to G-Trade if you would like to trade over there. I also want to ask you, let me know in the comments below. I've been doing a lot of AI content. Have you been watching the content? Do you enjoy it? So I've been doing 3 AI edits a week. We started with a render deep dive. We went into the Apple Vision Pro and how that could potentially open the way for, pave the way for a new industry, digital real estate. And then I also gave some picks for my top AI pick and shovel altcoins. And I'm doing a video tomorrow which focuses more on AI stocks. I think we talk about a lot of crypto on the channel, but I feel like it would also be interesting to kind of cover the stock component too. Not shilling securities, obviously, but just talk about the landscape for AI. And then we're also going to get into some videos soon about how to actually use AI to become a better crypto investor. Because at the end of the day, why do we want to do AI videos? It's not to ride the AI train. It's to actually utilize that tech and help you guys make money using AI. So if you are enjoying the videos, let me know in the comments. I'd be interested to know. If you haven't watched them, start checking them out. They're 10-minute videos. They're short. Watch this on double speed. It's a 4-minute video. And yeah, I'm uploading these pre-records a few times a week now. I'm still going to stream a little bit, but you guys are noticing I'm streaming a lot less because we're also putting out this pre-recorded AI content as well as the crypto content. So it's basically the go with that. Someone says the cash is the most underestimated. When it comes to alts, in this AI pick and shovel sector, yeah, render is talked a lot about. A cash isn't. Definitely on my list. Even 𝗲𝗚𝗏 actually, and some of these storage plays have some synergy with AI. Now, I must make it very clear, a cash isn't an AI project, but it's potentially an infrastructure provider for AI development because it's a cloud computing solution, right? So it's interesting, and I talked about that in the AI video as well. Bobby says, all my videos are great. Amazing to hear you're enjoying them. Lord Drake says he loves AI videos. All right, glad you guys like them. Another one probably coming tomorrow, and then on the weekend, we're dropping a pretty good one as well, which is going to teach you how to find crypto gems using AI tech. So lots of cool content coming, but I will live stream tomorrow as well. And I think that's it for now. We covered a lot. SwiftX doesn't hold AI. I know. I think Binance does. But then you're going to have to off-ramp native crypto to crypto. That's just how it is these days with the regulatory landscape. But I think, we will get regulation here in Australia as well. Hopefully the US improves their stance, but in the meantime, it doesn't look like that's the case. I'll see you tomorrow. Hope you have a lovely rest of your day. I'll see you in the next one. Peace out.